Good morning, everyone. Welcome to another episode of the Mizuho Week Ahead. I'm Bunhing, macroeconomist at Mizuho Bank. This week's theme is rising tensions and easing bias. Tensions between the Fed and the Trump administration was taken up another notch last week, with Fed Governor Lisa Cook being accused of mortgage fraud. Notably, should Cook be forced to resign, Trump appointees will hold a 4-3 majority of the Fed board. Nonetheless, this is different from having a majority on the 12-member FOMC, which decides on monetary policy, as there are 4 other regional Fed presidents on the committee aside from the 7 governors. Last Friday, the easing bias was clear on the back of Powell's monumental speech at Jackson Hole, which will also be his last. He has single-handedly shifted the entirety of rate cut expectations, raising the odds of a 25 basis points September cut from 72% to 85%. USD yields sank by the front end in a boost steepener, while the dollar has plunged with the DXY dropping to below 98. On balance, with caveats such as saying that the labor market situation is unusual and the labor market balance is a curious one, markets should be wary about taking rate cut bets too far. Nonetheless, the focus will be on the upcoming NFP print as the Fed intensifies their focus on the labor market. Across the Atlantic, amid German economic woes, the euro last week was hardly comforted by the details of the US-EU trade deal amid their geopolitical proximity and uncertainty over the Russia-Ukraine situation. In central banking circles, the RBNZ reduced their policy rate by 25 basis points, but the biggest surprise came in the form of 2 members voting for a bigger 50 basis point cut. Bank of Indonesia surprised with a 25 basis point cut last week as they look to provide more support to growth, with Governor Mizuho saying that the inflation expectations remain anchored. The rupiah underperformed last week, which also reflects a precarious fiscal backdrop. For the upcoming week, tensions are far from abating. The Bank of Korea faces a tight call as the recent uptick in industrial production and the 15% tariff deal reduces the urgency of easing, while slower housing price momentum in Seoul alleviate earlier concerns about macro-prudential instability from easing. We lean towards, marginally, a rate cut and expect dissent within the committee. To be clear, even in the event of a hope, we expect that the communications by Governor Ri to signal that easing remains on the table, and as such, markets appear to be insufficiently pricing in rate cuts at the front end. In the Philippines, the BSP is widely expected to ease by another 25 basis points as they look to provide more support to growth amid a loss in relative tariff differentials following the latest reciprocal tariff announcement in early August. All in, amid these heightened tensions and easing bias, realignment is par for the course, as reflected in the readjustments in tech valuations last week. For more information, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you.